Hello and welcome to Sectors Up Close. I'm Ramzan Karamali. Our sector today is UK Housebuilders and my guest is Chris Beauchamp, Chief Analyst at IG. For buyers, the UK housing market is in crisis. The Bank of England last week raised rates to their highest since 2008. For homeowners, this means their interest costs will double, putting pressure on overall prices. The latest house price index published by Halifax recorded a decline of 0.3%. But a long-standing lack of housing stock has made it worse for renters, who have seen costs rise by about 4.5%. So what does this mean for companies that construct the UK's housing stock? One top builder, Persimmon, says it's facing materials inflation between 8 and 9%, while it also said year-on-year forward sales were down 30%. There is no index that tracks the sector, but Persimmon, for example, is trading at a cheap valuation. Its PE ratio is under 8, and its dividend yield is 12%. So what should investors be doing? Well, to help us answer that, I'm joined by Chris Beauchamp from IG. Chris, let's start off with the interest rate question. It's making affordability a bit of an issue. How's that impacting on builders?
Well, it certainly has hit demand, I think, really. A dramatic move in rates by the BOE over the past year has changed the landscape dramatically, I think, and that's put pressure on the outlook here. They know that people are finding it harder to find the money for these housing costs. And of course, moving from renting to buying, with so many people, as you say, paying more in terms of their renting, that puts pressure on the market as well. Now, it hasn't really responded in prices, I think, because of the relatively slow pace of house building. So they've had that cushion. But certainly, I think they face a much tougher outlook than at any point over the past decade.
We talked about the impact of inflation on margins. What's your take on that? Is there any signs that could be easing back a bit?
Well, I think there are hopes that a lot of the worst is behind us, if you like, really. With the pound clearly down at its lows against the dollar last September and October, the huge rebound we've had since then will have undoubtedly improve the picture, I think, certainly looking forward into the rest of the year and beyond, really. So a lot of those raw material costs that they were talking about a year ago, they have abated in terms of the speed of the rises, even if they haven't entirely gone into reverse.
Now, performance amongst the builders is pretty variable. Why is that, and what do you put that down to?
Well, I think Persimmon is the one that really stands out as the big loser, mainly because in some ways it was the big winner and there was a lot of good news baked into the price. Now, I think it moved its hand early, I think, really, in terms of declaring the tougher outlook last year. And you saw the share price essentially collapse. It has recovered to an extent this year, but it's been left behind because others, like Taylor Wimpey, have been able to be a bit more upbeat, I think. So it may be the fact that perhaps Persimmon operating in a slightly broader scope and slightly even a higher end than its competitors actually held it back for once, whereas previously it proved to be quite the boon.
Demand for rental properties seems to be on an upward trajectory. How do investors take advantage of that? How do they invest into that rental side of the market?
Well, I think you've seen a broadening of real estate investment trusts that have enabled people to gain access to that, really. Also, the rise in student accommodation, so you're seeing perhaps a different way of playing that rise in rented accommodation, the growth there, really. So that's one more thing I think that people need to be aware of, rather than just looking at house builders per se, because obviously the supply of mortgages has decreased to an extent. So that's a different way, I think, of looking at this continued demand for homes, because that's the irony of the situation, is that people are finding it increasingly unaffordable, but the demand is still there.
We spoke about Persimmon, but are there any stocks in particular within the sector that you're fond of at the moment?
Well, I think you have to look at the market's already re-rated Taylor Wimpey and Barratt Developments because of their improved outlook, and that's really where the flows appear to be going, and that supports the valuations there. That they don't look particularly expensive. I think it's sort of 8 and 9 times earnings, so that does maybe make them look better value. You have to be careful, of course, with these dividend yields, because some of them, as you were saying with Persimmon, they're quite high. The risk is that maybe we get a bit of cut to that if margins don't start to respond in the positive way that many are hoping.
Chris Beauchamp from IG, many thanks for that. And that is your look at UK house builders. I'm Ramzan Karamali, and this is Reuters.